Progress.
Very good morning. So welcome back to your virtual classes. So we are doing the company accounts, that is paper one accounting. In the under that the module two, the chapter number 11, company accounts, and under that we are come to the fag end of this particular chapter, and we are in the unit number 5. So that is nothing but the redemption of preference shares. So we did the entire illustrations, like there were 10 illustrations and 8 illustrations we did in the earlier class, and now we are going to handle 2 illustrations. So before we can go with the next illustration, I just wanted to have a very fast recap or whatever that portions we have done in the last class. We will just have a very fast brush up of the same. So a company can issue different instruments for the purpose of raising money from the markets or from the public. So two such instruments are the shares and debentures. So debentures at length we have seen, shares issue at length we have seen. So when I come back to shares, the shares are of two types again. So equity shares and preference shares. Equity shares are the one which gives you the voting rights. You directly become the owners of the company because you are getting the voting rights. But the preference shares are those class of shares which have got a preference over the equity shares in two things. One is in the payment of the dividend, and next one is in the repayment of the capital at the time of winding up. What is dividend? When a company, after taking money from the public, it uses it into the business and makes certain profits. After giving for all the expenses, if there are extra profits remaining in the hands of the company, it can always give back to the shareholders. So the amount that it pays back from the profits to the shareholders is called as dividend. So when the dividend is being paid, as I told you, there are preference shareholders, equity shareholders. The first thing or the first priority will be given to the preference shareholders. That is why they have this name preference. And even at the time of winding up, we have all put money into the business. So who will be getting their money first is the preference shareholders will be getting their money first. Then only if anything is remaining, the equity shareholders will be getting it. When we are talking specifically about the preference shares or preference shareholders or preference share capital, there are different types of preference shares one company can issue. So we have seen different types. So the first type is convertible, non-convertible. Those preference shares which can be converted into another form of instrument are called as convertible. Non-convertible, just they will be issued as preference shares and they will be redeemed or repaid as preference shares. Then we have redeemable, irredeemable preference shares. So redeemable preference shares are those which at the time of issue itself, the company will be specifying the number of years or the period within which these shares will be repaid back. So the word that is being used here is called redeem. Redeem is nothing but repay. Irredeemable, they are not repaid during the lifetime of the company. But the Act specifically says maximum period of an irredeemable preference share can be 20 years. If the company is engaged in infrastructure projects, then it will be more than, it can issue irredeemable shares for a period of more than 20 years. Otherwise, for all the companies, it will be only a maximum period of 20 years. And then we have cumulative and non-cumulative preference shares. Cumulative, nothing but the dividend. In a year, if the company does not have profits, it need not pay dividend. But if you are issuing a cumulative preference share, in that particular year where you have not received the dividend, it can be carried forward. So you can say in the subsequent year, if there is profits earned by the company, then these preference shareholders will ask, last year's balance also you should pay me. No. So I have added it. Cumulative balance you give me last year dividend plus this year dividend will be entitled, or these cumulative preference shareholders will be getting the arrears of the dividend also. In case of a non-cumulative, no. If that year there are no profits, no dividend is given, over. Next year, it is the same. Like next year, you will have a different story. If you have profits, you will pay only pertaining to that period, not the earlier. So there is no carry forward of any arrears in the case of non-cumulative preference shares. And the last type of preference shares are participating and non-participating. Participating means after the payment of the particular, I told you the first preference goes to the preference shareholders. When profits are there for the company, and the dividend is first paid to the preference shareholders and then next it is paid to the equity shareholders. If the company has got profits even after payment of dividend to equity shareholders, there is some profit, then in that profit also the preference shareholders will come and participate, ask for a share. That is called as participating preference shares. Non-participating, after the dues of the preference shareholders is done, they are just gone away. That's it. You can't ask for anything else even if there is remaining in the company. These were the types that we saw. And in the chapter 11, unit number 5, specifically we were discussing about the redemption of preference shares. If you are issuing a preference share, at some point in time you will have to repay it back. So from the company's point of view, how am I going to account for the redemption? So then we started to understand that this particular preference shares, when they are getting redeemed, there are sources. So there are different types of sources from which you can repay your preference share capital. Number one is you can issue new equity shares. So what I was talking the other day, you can issue directly the equity shares, or you can capitalize the undistributed profits. So when I talk about what is undistributed profits, is that profits which is available otherwise for distribution as dividends, which is available for distribution for some other purposes. That particular profits, if it is there at length, if there are more in your particular balance sheet, you can use that as a source to repay back your preference capital. And then the third one was the combination of this 1 and 2. So the third is nothing but combination of 1 and 2. So technically, when we started doing the illustrations on this particular concept, the first one, we exclusively did 3 illustrations. One was illustration 1, 2 and 3, which specifically told there are certain number of preference shares to be redeemed on a particular date. And now this is being sourced by the issue of fresh equity shares. So the formula or the concept that we learned there was very, very simple. Whatever is the value of the preference shares that has to be redeemed, divided by the face value of the equity shares, irrespective of whether the new equity shares are being issued at par or premium, you are supposed to consider only the face value. So the securities premium always will not be used to source or to finance the redemption of debentures. Okay, securities premium will not be used to source or finance the redemption of debentures. It is only the face value, number of shares into the face value. That amount only can be used for repaying back your preference shares. That's it. As simple as that. Illustration 1, 2 and 3. Illustration 1 was a very direct question, so that we took whatever was the face value of the preference share capital divided by the nominal value of the shares. Finish. We found out the number of shares and then we passed the entries. Now, coming back, what are the entries to be passed? If it is going to be the category 1, I told you when you receive money out of a fresh issue, there will be one single entry, which is quite simple. Bank account debit to share capital. You are getting money out of the issue of shares. There are no installments like application, allotment, first call, second call, no. Single installment, everything is collected. So the just one single entry will be bank to share application, share capital. Suppose if there is a premium collected in the question, then it will be bank account debit to share capital to securities premium. So this was the illustration number 2 that we did. There also specifically I told you, while computing the number of shares to be issued, just take the value of the preference share capital to be redeemed divided by the face value. Don't consider the premium, because I told you the premium amount will not be used to finance the redemption of preference shares. Simple. Then we did the illustration number 3, which said the face value of the equity share was 9 rupees. No confusion. 10 rupees can be there. 9 rupees also can be there. So you took the actual value of the preference share capital to be redeemed, which came to 90,000 divided by 9, 10,000 equity shares. Simple 3 questions we did. Then we came to the second question of capitalizing your undistributed profits. Now, what is this concept of capitalization of undistributed profits? If we can go back one unit before, in the unit number 4, when we were dealing with the bonus issue, I told you there are different reserves which are there in the company's balance sheet. Now, out of these reserves, you want to show or you want to give a benefit to the existing shareholders. So you will take the money from these reserves, put it into the share capital. Now, a similar concept is being used even here also. But here, the only difference being the what are the reserves that you will touch, or what is that you have to create. Under the capitalization of undistributed profits, you will be creating a separate reserve for the purpose of redemption of the preference shares called as the capital redemption reserve. The entire purpose of this particular capital redemption reserve is nothing but, as per the Act, it is to safeguard the interest of the preference shareholders who are giving their money. So this is just undertaken to just take care that whenever the company is having profits, every year a certain amount will be transferred from the profits to the capital redemption reserve, because at a later point in time you have to repay back the preference shares. So definitely from the beginning itself you will be transferring the amount to the capital redemption reserve. So we exclusively saw illustration number 6 that was talking to us about how do you capitalize the particular profits, how will you create a CRR, how will you redeem it. Now coming back here, what is the entry that you passed? Here it was the bank account debit to equity share capital. If there was securities premium came into the question. This was the entry that you passed where you had the issue of new equity shares. When the profits have to be capitalized, what are the reserves I have to touch? In case of bonus issue, there were 4 reserves where you were touching. The first thing was the capital redemption reserve. I told you in that unit, I will be talking at length in the unit number 5. So the capital redemption reserve, which is created for the purpose of redeeming the preference shares after the shares have been redeemed, after the share capital has been paid, what will happen to this reserve? It will be used for issuing fully paid bonus shares. So there the first preference was given to CRR. Then came the securities premium. So as per section 52 of the Companies Act, securities premium can be used for issuing fully paid bonus shares. So first capital redemption reserve came, then securities premium came. And then if the amount was still not enough, then which reserve you went to? General reserve. Even then the amount is not enough, then you will have to go to the P&L account. These 4 accounts are the major things that we have seen there. Now, madam, when I come to this particular redemption of preference shares, what is the reserves or what are the reserves I have to touch? Will I take everything? No. Here specifically, CRR you can't take because you're creating CRR, correct? Second thing, securities premium can I take? Securities premium explicitly is prohibited. You should not be using it for the redemption of the preference share capital. So don't consider it. So what are the 2 things that is remaining? Very simple. The general reserve is one thing that you will be debiting. If the amount is not sufficient, then you will also be debiting the profit and loss account. So general reserve account debit, profit and loss account debit to the CRR capital redemption reserve. Okay. You will be taking the capital redemption reserve. You will be debiting these two reserves and crediting the CRR. So that simple is this entry. Okay, madam, you're talking only about one entry, but what is the entry regarding the redemption? So these are the entries I am receiving money or I am transferring the profits. Okay. When you have to pass the redemption entries, there are 2. The first one talks about when you have decided to repay the capital, percentage preference share capital account debit to the preference shareholders. Now here, the preference shares can be redeemed at par, no problem. Redeemed at premium. When you are doing a premium on the redemption, is it a profit or loss for you? You are repaying it at extra value. That extra value is an expense to the company because the company received only 100, repaying 105 rupees. Extra 5 rupees I am paying from the pocket. So it is an expense for the company. So redemption premium is a loss. It has to be debited. So in the redemption entry, percentage preference share capital account debit, premium on redemption of preference shares, if it is coming, then debit that account also to the preference shareholders. The second entry, when you actually make payment to the preference shareholders, it will be preference shareholders account debit to the bank. Simple. These entries are common even here, and here also. Under the 3 things, these entries will come commonly. But what will change according to the question? If you have issued only new equity shares, then you will get bank to share capital. If you have only utilized the undistributed profits in your balance sheet and capitalized them, created a CRR, then you will be getting general reserve account debit, then profit and loss account debit to the CRR, that is capital redemption reserve. In a combination, you will be getting this entry, and also the redemption entries. Now the next question that came before us, or what was the next illustration that we did, was illustration number 4. In illustration number 4, it was quite easy. So we understood the concept of calculating minimum number of equity shares required for the redemption. So this was a combination of both. So when the company or the question explicitly says so much preference share capital has to be redeemed, to redeem that particular preference share capital, I already have some undistributed profits in my company. First, utilize it, and then for the remaining value, you have to issue new equity shares. So, in the same concept, we did the illustration number 4, which spoke about 5 lakh rupees was the value of preference share capital to be redeemed. 3 lakhs was already available in the company's balance sheet general reserve. So 5 minus 3, 2 lakhs I have to raise or get money by the issue of new shares. So the 2 lakhs I divided by the face value. The face value in that question came to rupees 9. So when I divide, I get decimal points. I cannot issue shares in fractions. I cannot tear the share certificate and give it to you. So they have given in the same illustration mentioning that it shall be converted into multiples of 50. So 22,222.22 was the number of shares. I converted it into the next nearest 50 multiple. So 22,250 shares. And I finished the question. In that particular question, that was an introduction. How will you calculate the number of shares? And then we went to illustration number 7. In the illustration number 7, everybody of you had few doubts. You started asking me, madam, here the particular question says issue of equity shares is given to me, madam. That is okay. Issue of debentures is also given to me, madam. So should I issue or should I consider the issue of these debentures for the purpose of redemption? No. The Act explicitly says only the proceeds from the issue of new equity shares alone can be used for the purpose of redemption. You cannot issue debentures. So nowhere in the question it was mentioned that out of the issue of debentures it has been redeemed. No, they have just given the company had so many preference share capital and the company went ahead with the issue of the following. That's all. So it just said the company went ahead with the issue. The moment you see the company went ahead with the issue, you have to understand as per the concepts taught to you that debenture issue will not be considered for the redemption of preference shares. It is only the equity shares. So illustration 7 was a very direct question wherein we knew that some number of equity shares were issued. If I'm not wrong, for in the illustration number 7, we saw 3 lakh rupees worth preference share capital had to be redeemed, and out of that you issue 25,000 equity shares of rupees 10 each. So 2,50,000. So I know the equity shares. Now the amount to be transferred to the capital redemption reserve was 50,000. So questions can come to you, my dear students. Either like illustration 4, like they will give you the profits first, you will subtract it and find out the number of equity shares to be issued. Or they can ask you like in the illustration 7, where number of equity shares will be directly given to you. You will subtract it from the preference share capital. The remaining value is nothing but you should understand that it shall be transferred to the capital redemption reserve. That's all. It was a straight question except for the debentures. When they are issuing debentures, just make one simple entry, bank account debit to percentage debenture getting the amount. That's all. You are not going to take this amount and use it anywhere for the redemption of preference shares. It is just given to you for a little diversion. You should just remember this is no way going to affect my thing. Mine, I am bothered only with the equity share capital issue if there are any undistributed profits. So I will take only them, go to the working note, do this computation, come back to the main question. I am going to pass the journal entries. The journal entries here will be issue of equity shares. Also, I will pass a journal entry for 2,50,000. Then 50,000, I am going to create the CRR. And then I am going to pass the redemption entries. So 4 entries in total will come. Simple question, illustration 7. The only thing you people have to remember is the debentures, whatever the money is being raised by the issue of debentures will not be considered. Then what should I do with this debenture issue? Just pass the issue entry, which is nothing but bank account debit to percentage debenture capital. That's it, over. Okay. Now then we understood the illustration number 8. Illustration number 8 also was a combination of you have undistributed profits, remaining you should find out what is the new shares to be issued. Okay, this was the combination. But there again, for the undistributed profits, we had certain restrictions. For example, The general reserve, there was a balance of 80,000, but it was given to you clearly in the question 20,000 you are not supposed to use. The general reserve should still have 20,000 as balance. Okay. So then what did we do? Out of 80,000, 20,000 should not be used. So minus the 20,000, 60,000 was available for redemption. That we took. Then came the investment allowance reserve. In this investment allowance, 10,000 was there, but out of which 5,000 should not be used for distribution. So 5,000 was subtracted, remaining 5,000 alone was considered. Okay. Then we came to P&L account. Please remember, whenever we are going to touch the P&L account for creating the CRR, you should carefully check for the condition. What condition? Whether the preference shares are redeemed at par or at premium. If the preference shares are redeemed at par, no problem. Take the entire balance of P&L account. If it is redeemed at a premium, what you should do? You should calculate what is the premium on redemption. Okay. After calculating that amount, you should subtract from the P&L balance. Why, madam, you should subtract? Because premium on redemption will ultimately be given from your profit and loss account only. So if I use the total balance and create CRR, where will my premium on redemption account go and sit? I will not have balance, no? So you should remember, if there is a premium on redemption in the question, while you are creating the CRR, don't take the entire value of the P&L. But whatever is the value of premium on redemption, please subtract that value and take the balance. So in this illustration number 8 that we were seeing, 20,000 was there in the P&L, but premium on redemption was 10,000. So 20,000 minus 10, I took 10,000. So 60,000 plus 5,000 plus 10,000, 75,000, I went and created a CRR. So the total value was 1 lakh minus 75,000, 25,000, I have to issue the new equity shares of whatever the face value. 25,000 divided by 10, 2,500 shares I issued for the purpose of redemption. So everywhere, every time you are working out a illustration, you are supposed to do the working note. In a question concerning the redemption of preference shares, the most important part everybody has to follow is computation of the working note. While you start doing the working note, you will get a lot of doubts. As in, madam, the shares are redeemed at a premium. Should I take the premium value? No, always the face value. If you have to calculate the CRR, the formula is, I told you on the other day, the nominal value or face value of the preference share capital minus the face value of the equity share capital. Always face values. Even if there is a premium, don't bother. Just consider the face values. Okay, for computation of CRR, always the face values. Then for computation of number of equity shares, what will come into the picture? That will depend upon the question. So illustration number 8, after considering 75,000 of undistributed profit out of 1 lakh, 25,000 was remaining. So this amount was raised by the issue of equity shares. And then we passed all the entries. My dear students, one more entry I did not tell you was, when you are redeeming, if it is redemption at premium, the premium on redemption should be written off. After passing the redemption entries, you should pass one additional entry. What is that? It is nothing but P&L account debit to premium on redemption of the preference shares. Why, madam, you are putting it into P&L? Because after I redeem the particular preference shares, any account pertaining to the preference shareholders or preference share capital should be removed. So this is a loss. The premium on the redemption of preference shares is a loss. So this loss, immediately I will take it to the P&L and debit it in the same year and close it. I am not going to carry forward, write it off, nothing. Simple concept. If there is a premium on redemption, take it immediately in the same year to the P&L account and write it off. Close it. That's all. That was one other entry that we passed. And then finally, on the other day, we did the illustration number 5 and closed the class. What was this illustration 5? It was a little different. It was not coming under this particular formula, but they were giving us, or they told us that the company had a bank balance and the company also had few investments which it sold the investments and got the money. They told you compute the number of equity shares. But madam, till now you taught us preference share capital minus the undistributed profits. Then we got the equity share capital or number of shares to be issued. Or like in illustration 7, preference share capital minus equity share capital, we got the CRR. But here CRR also we don't know. We also don't know what are the equity shares. Then how to find out? Now that is why illustration number 5 was a typical question. In that, I will again do the working note. Please see everybody, the preference share capital was 65,000. I am redeeming at a premium of 10%, which comes to 6,500. So the total value or the total amount that the company needs for redemption is 71,500. How will I get the 71,500? They have clearly given to you in the question stating that the bank balance which is existing at 31,000 rupees in the bank, I have to leave a balance of 12,000 there. It is given to you in the question. So leave a balance of 12,000. The remaining, use it for redeeming the preference share. So 19,000, I got it from my own bank account in the question. Second one was investments are sold. What is the value of sale? 15,000. So the total value that I got is 19,000 plus 15,000, which is 34,000. Now remaining out of 71,000, if I subtract this 34,000, I get 37,500. Now this is the amount I should raise by the issue of shares. What is the face value of the particular shares I have to issue? By 50. So 750 shares I am supposed to issue. Is this clear? So here alone I found out in a different way wherein I took the value, I took the preference share capital premium also redemption, then I found out the total value to be redeemed, out of which I used the bank balance which I had subject to a retaining amount. I kept that separately. Remaining amount I used, and then I also used or I also got money from the sale of my investment. Clear? Now I got this. My dear students, here the question will not get over. You know the face value of the shares to be issued. It is nothing but 37,500. Correct? Now I am supposed to calculate the CRR. Why, madam? I am getting from here. No. Again, why should I? No. Even if you are getting money by the selling of assets, that has got nothing to do with not creating CRR. Whenever out of the total value of the preference share capital, if part amount is coming from the issue of equity shares, the other part understood that CRR should be created. What is the formula for creating the CRR? Face value of the preference share capital minus face value of the equity share capital. What is the face value of preference share capital? Only 65,000. What is the face value of equity share capital? 37,500. So the value of 27,500 should be used for creating a CRR. How did I find this out? After finding the share value, I put it in the formula and arrived. Now, how did I find out the share value? From the total value of the funds required, how much funds I have taken that, subtracted it, and I have arrived. So, illustration number 5 is a little typical question, not full typical question, normal question only. But there you find that assets are being sold, you are getting money from that, you are using your bank balance, remaining money alone, you are issuing the equity shares. That is the meaning. Okay. When you were passing the entries also, what did I tell you? The first one is for the passing or for the issue of equity shares. It will be bank account debit to equity share capital 37,500, 37,500. My dear students, it is important for all of you to write the presentation properly in the books of so and so, the journal entries, date, particulars, ledger folio, amount and amount. That is how you will have to pass a journal entry. Narration, very, very important. Being, I told you specifically, 750 shares of 50 each issued as per board resolution number dated so and so. This is quite important because it has to be approved by a resolution that this particular redemption of preference shares will be financed by the issue of equity shares. That is why, to make the examiner understand that you have understood the particular concept, you are supposed to mention this in the narration. Clear? We wrote 37,500, 37,500. Now, madam, we created the CRR. So, what is the amount or the entry that you will be passing for the CRR? We will be using P&L account to capital redemption reserve. Please use the full forms. Don't write in the short forms. Use the full forms. Okay. So it will be CRR created out of profits. Now, after this, we also know that the investment was sold. Investment value was 18,500, but it was sold at 15,000. So there is a loss. So when you are selling the investment, the entry will be bank is coming inside. You are receiving money. So debit bank to investment was an asset for you. Now you are reducing. It is gone away from your books. When you reduce, you have to credit. Bank you received 15,000. Actual value is 18,500. So the balance of 3,500 you will debit it to your P&L because it is a loss for the company. Clear? Because it is a loss for the company. And after passing these particular entries, what is the next entry that you people have to pass? It is with regard to the redemption. Correct? So with regard to the redemption, I will just rub off this side and I will pass. You have premium on redemption. So it will be percentage preference share capital account debit, premium on redemption of preference shares debit to the preference shareholders. So it comes to 65,000, 6,500, 71,500. That is this value. And then when you make a payment to them, preference shareholders account debit to bank, which is again 71,500, 71,500. I told you don't forget to transfer this value to the P&L. So the last entry will be P&L account debit to the premium on redemption of preference shares. 6,500, 6,500. As simple as that. These are the entries that we saw as a part of this particular last illustration number 5 while we were closing the class the other day. Preference share redemption is one of the most easiest topic wherein your entire skills or your entire concept understanding will lie in calculation of the working note. And trust me, my dear students, practice your illustrations again and again because you will not get anything that is out of these illustrations. It is going to be that very easy. Okay. So these were the entries that we passed and we understood the last class. Yeah. So, and it is quite easy. Now, okay, so I have a doubt here from Gauri. So I'll just take a doubt and then we'll move on to the illustration number 9. Gauri, can you ask what is your doubt quickly so that we can finish it and go? Yeah.
What is the purpose of creating the CRR now?
Okay, that's a good question. Why do you have to create CRR? This is given specifically in the Act to protect the interest of the preference shareholders. What if, see, when preference shareholders are issued by the company at a particular year, so let us say 2020, they have issued preference shares. Okay, that time the company was doing really, really well. And it was given in the terms of redemption that after 5 years, the company will have to repay the preference share capital. So it so happened that during 2020, profits were good. 2021 also super profits. 2022 also very, very good profits. But next year, 2023-24 was seeing some downfall in that particular business. So at the time when they had to actually repay 2025, they did not have enough profits. They did not have enough cash. Now, who will be at stake? The preference shareholders who have given their money, invested their money in the company, will go for a toss. That is why, to eliminate these kind of cases, while you are collecting the money from the preference shareholders or even the debenture holders, you will have to create these separate reserves just for the purpose of when the company is doing good, well and good. No, you have amount in CRR. So what will happen at that time when I want to actually repay? If I don't have cash really, if I don't have the profits, I still have some amount kept aside. So it is based on prudence concept, and in the interest of the preference shareholders, the act is telling their money should not go for a toss. You are supposed to protect it by all means. So you are supposed to create the CRR. Okay?
Okay, ma'am. Thank you.
No problem. So now, my dear students, we will be going ahead with the illustration number 9. So what is that I should expect from the illustration number 9? We'll read the question very quickly and then we will start working it out. Okay? All of you, please look at the question. The balance sheet of XYZ Limited as at 31st of March 2021, it includes the following information. So the first information is 50,000 8% preference shares of rupees 100 each, 70 paid up, 35 lakhs have been received. Then 1 lakh equity shares of rupees 100 each, fully paid up, 1 crore. Okay. Securities premium is there. Okay. Capital redemption reserve is there. Also okay. You have general reserve and then you have the bank balance. Okay. Now come down. Under the terms of issue, the preference shares are redeemable at 31st March 2022 at 5% premium. So the preference shares are redeemed not at par, but you are giving them a 5% premium. Okay. In order to finance the redemption, the company makes a rights issue of 50,000 shares of rupees 100 each. Okay, 50,000 shares of rupees 100 each at the rate of 110 per share, which is payable as 20 on application, 35 on allotment, where you have the premium also. So 100 rupees equity shares issued at 110. So how much is the premium on the equity shares? 10 rupees is the premium. That is collected totally, and in what? It is collected in the allotment. So out of 35 rupees of allotment, how much is the premium? 10 rupees is the premium. That is your internal understanding. The issue was fully subscribed and allotment was made on 1st of March 2022. The money due on allotment were duly received by the company on 31st March 2022. I think here it has to be December, I guess. Okay. So the amount due on allotment was received by the company on 31st of December 2022. And fine. The preference shares were redeemed after fulfilling the necessary conditions of this particular section. Now they are asking you to pass the particular entries. Okay. So this is a very straight and a simple question which says, all of you please see, which says there are preference share capital to the worth of 50,000 preference share capital at the rate of 100 rupees face value, but only how much is called up? Only 70 rupees has been called up as on that particular date. I told you, whenever there is partly paid up preference shares in the balance sheet given to you, you cannot go for the redemption directly. What you should do? Make the partly paid preference shares as fully paid preference shares. Correct? What you should do? Make the partly paid preference shares as fully paid preference shares. So here, my dear students, in the illustration number 9, additional step is there. Till now, in all the illustrations, we have not seen where there were partly paid preference shares. But in this question, we are seeing the partly paid preference shares coming into the picture. So now what are we supposed to do? Very simple. So illustration number 9, in the books of ABC Limited. Okay. So we are doing the journal entries. The first journal entries is to make the partly paid preference shares into fully paid preference shares. Okay. partly paid preference shares into fully paid preference shares. What is that entry you will be passing? So ultimately, the last out of, see, I will write it here, 50,000, how much percentage preference shares? 50,000, 8% preference shares. Okay. 100 rupees face value, but called up only 70. So now make the final call. What call it is? 30 rupees you need to call the amount now. So it will be, first will be the transfer entry. My dear students, please understand this application, allotment, first call, final call, how we pass the issue entries for equity shares. The same concept will apply even for preference shares also. That is why we did not say separately study issue of preference shares. We combined both the concepts and studied under unit number 2 issue of the equity shares. In that preference shares will come. Okay. So when final call has to be done, 2 entries will come. What are they? Transfer entry, receipt entry. In transfer entry, it will be 8% preference share final call. Why are you using the word final call, madam? Because 70 rupees already called over. Now 30 rupees is remaining. So you are assuming that it is the final call money balance. Okay. 8% preference share final call to 8% preference share capital. This is the first entry. What is the value? 50,000 into 30. So it comes to 15 lakhs. I am making the final call now. I am doing what? Making the final call now. That's all. Now come back here. What will be the narration? The final call amount being called. That is, you are sending the letters. When then you are supposed to receive the amount. So bank account debit to what? The 8% preference share final call. That will be the receipt entry, right? So it will be 15 lakhs and 15 lakhs. So now what I did, through this entry, I received money on the final call of the preference shares. Correct? So now 70 plus 30 I called, it became 100. Now I am good to go. Finish over, because now these 8% preference share capital total value I received. Okay. Now the next actual question will start. What is the actual question telling you? For the purpose of redemption, how much is the total value of redemption? Yeah, it is 50,000 preference shares into 100 rupees. So I need 50 lakh rupees. Now this 50 lakh rupees, how I am getting? By the issue of equity shares is given to us in the question. If we can go and see how many shares have been issued, my dear students, it says clearly the company makes a rights issue of 50,000 equity shares at 100 rupees each. So now you can tell me, madam, entirely I need 50,000 into 100, which is preference share capital. I also got 50,000 into 100, but the catch is here. Even though you have issued it at 100 rupees, are you receiving the entire amount? No. All of you please see. So the preference shares, okay, the preference shares are being redeemed at a much before date. So here there is a small thing that you people have to make a note of. Okay. The preference shares are getting redeemed on the 31st of December. Okay. So which means that you are getting the amount and the balance. Please see here. My redemption is done on 31st of December, but I am receiving only application and allotment by that. Balance I am receiving after the redemption. So what is happening here? You people have to remember only one particular point. Even though I am doing a rights issue. What is the meaning of rights issue? That is also issue of equity shares. One of the benefit. Okay. Now I'm doing rights issue means I'm issuing new equity shares, which is worth how much? 50,000 equity shares at the rate of 100 plus 10 rupees. Correct? I'm doing it at 100 plus 10 rupees. How I am receiving it? 20 on application, 35 on allotment. So what will be the balance out of 110? If I'm receiving 55 here, the balance will be on this particular call. But what is that given to you in the question? Final call, are you doing it before the 31st of December? No, you are doing it only after that on 1st January. So you should be very, very careful in the questions like this also, because my dear students, what is received for or before the time or at the time of redemption of preference shares only should be considered. So here, my dear students, what you should understand, out of the entire 50 lakhs wanted, I have received only part of the amount. So remaining part, what I should do? Simple, create a CRR. Why am I explaining the question so much to you? For you to understand that even when the shares are being issued, till now all the illustrations we have seen that the entire value is received in one installment. But in illustration number 9, not received in one installment but some installments, and even in that few installments received before the redemption. Those installments only I am supposed to consider. So now, my dear students, what is the formula I will use for CRR? Face value of the preference share capital minus face value of equity share capital. Now please very, very clearly look here. Even though I have got 5,000 preference shares at 100, what is the preference share capital face value? 50 lakhs. I am redeeming at a premium, not my problem. Just consider the face value, which comes to 50 lakhs. Now, my dear students, we should understand this face value of equity share capital. I always told you, whenever the shares are issued at a premium, even in the time of issue chapter, I told you the moment you see there is a premium in the question, what you should do? Break it and write how much is the face value and how much is the premium. If you do like this, you will be able to understand that this brackets, the first amount is always the face value. Okay. The same concept I am going to use now here. How many equity shares are being issued? 50,000 equity shares are being issued. Correct? So what are the installments that you are collecting? Application I have collected. Allotment I have collected. So what is the face value of application? 20 rupees. Now what is the face value of allotment? If you don't break open and write like this, you will get confused and take along with the premium. But here, should you consider along with the premium? No, only the face value. So the face value will be 25 rupees. So I will be taking 25 here. So 20 plus 25 is 45, and the value I will be getting 45 into 5 will be 22,005, 22 lakh and 50,000. That will be the value. So out of 50 lakhs, 22 lakh and 50,000 is coming by the issue of new equity shares. What is the CRR? 50 lakh minus 22 lakh and 500 will give me 27 lakh 50,000 should be the CRR value. What it should be? Creation of the CRR. As simple as that. So in this particular question, two things that you have learned is, one thing, making the preference shares as fully paid preference shares, and the second thing, after making the preference shares as fully paid, you have issued equity shares. But the hitch that is given to you in the question is, the preference shares are redeemed on 31st of December, but the final call is being made after that. So I have not made the final call. Where is the money? I don't have the money. So I am going to find out how much is the CRR that is required. How will I find out? Using this formula. Total face value, don't take the premium. Premium will not come. Face value, whatever is the preference share capital face value minus equity share capital's face value. How will I consider that? I told you at the time of issue, in that unit itself I was talking to you, whenever you have a premium in the question, separate it and write it. Now it will be useful. See, in the cases like this where I told you securities premium you should not consider. Face value means apart, excluding securities premium. So 20 rupees application face value, 25 rupees is the allotment face value. I add both of this and I get this particular value. So 50 lakh minus 22 lakh 500, 27 lakh and 50,000 will be for the creation of the CRR. Simple. Okay. Now what will be the entries, madam? Simple. What will be the entries? You tell me. For application, what will be the entry? First will be the receipt entry and then will be the transfer entry. What will be the receipt entry? Bank account debit to equity share application account. That is nothing but 50,000 into 20, which gives you 10 lakhs. And then will be the transfer entry, equity share application account debit to equity share capital, 10 lakhs and 10 lakhs. First entry over, finish. Second entry, allotment. When I do the allotment, so shall I write here? Okay, I will just rub this off and write it here. So when I do this particular entry for the share application, the first entry will be bank account debit to equity share application account. How, madam? 10 lakhs, 50,000 into 20 is the installment. Amount received on application. Then you make the transfer entry. Share application account debtor to the share capital. Simple. 10 lakhs. 10 lakhs. Now, what is the second installment that is being made? Allotment. But in the allotment, there is securities premium received. So, what is the entry that I have to pass? First, the transfer entry. Share allotment account debit to share capital to securities premium. Simple. How much is the value straight to the share capital? It will be 50,000 into 25. Here it will be 50,000 into 10. So this will come to 5 lakhs. And this will be coming to 12 lakh and 50,000. Okay. And here it will be 17 lakh and 50,000. And then what will be the bank, the transfer, the receipt entry? Bank account to share allotment. I have received the entire 17 lakh and 50,000, 17 lakh and 50,000. So these are the entries I am passing for the issue of equity shares. You can tell me, madam, there is a rights issue done. No problem. Rights issue is also equity shares only. No. So indirectly they have told they are issuing the shares to raise this particular value. Simple. That's all. And we have to create the CRR. Already in the working notes, we have found out that the amount needed for the CRR is 27 lakh and 50,000. So from where I will create the CRR? Technically, in every question, I told you if they are giving you something in the question, take first general reserve, then P&L. If nothing is mentioned in the question, like in this particular question, we have in this particular question, we have the general reserve in the question. So we are going to create it out of the general reserve. So general reserve account debit to the capital redemption reserve. How much is the value? 27 lakh and 50,000. 27 lakh and 50,000. This is creation of the CRR that we have done. Okay. And then finally, we are supposed to pass the redemption entries. What is the redemption entry? What are the redemption entries? Simple entries. The same thing here will be 8% preference share capital account debit. Okay. Capital account debit will come to 50 lakhs and you are redeeming at a premium. So it will be premium on redemption of preference shares. This account debit. 5% of this comes to 2 lakh and 50,000 to the preference shareholders account. Okay. So it comes to 52 lakh and 50,000. So this is when you have made the amount or transferred the amount to the preference shareholders account. Okay. So the next entry will be when you make a payment to them. Can somebody tell me when you make a payment to them? It will be, I'm writing it here. It will be bank account debit to the preference shareholders, 52 lakh and 50,000, 52 lakh and 50,000. Simple. 52 lakh and 50,000 when you make the payment to them. Payment to the preference shareholders, this will be the entry. What will be the final entry? Still not over. The premium on redemption, 2,50,000 should be written off. From which account? Usually it will be written off from the P&L account, but in this question you don't have P&L account, so it will be simple, the general reserve. You can use the general reserve and you can nullify this particular amount. So the last entry that I have to pass is general reserve will get debited. So general reserve account debit to premium. So it will be 2,50,000 and 2,50,000. Simple. 2,50,000 and 2,50,000. This is for writing off the premium on redemption. These are the entries. This is the entire question wherein we first made the preference shares as fully paid. After making it as fully paid, we understood that equity shares were issued, but even in the equity shares, the installments were not collected in full. That is, at the time of redemption, only application and allotment were received. So you considered the face value of those equity shares, subtracted it from the total value of the equity preference share capital, and you arrived at what is the CRR amount. And then you passed the entries for the share capital issue, wherein for application 2 entries, receipt entry, transfer entry, for allotment, transfer entry, receipt entry. And while passing that, you were careful to pass the securities premium because it is issued at a premium. But while calculating the CRR value, you have excluded the premium. Then finally, you passed the CRR entry. General reserve, you have a huge balance. From that, you created the CRR. And then you passed the entries for redemption, wherein premium on redemption came. You passed the entry for the payment to the preference shareholders. Then finally, the premium on the redemption of the preference shares will be taken, or it had been taken from the general reserve. Simple. Okay, this is the entire question. Now we go to the final illustration of number 10. The same illustration, Kavita, just give me 1 minute. Okay, let me take it out, then go for the thing. It will be best, both of you. Okay. Yeah, Kavita,
Hello.
please ask. Yeah.
Ma'am, in this question, we have used the allotment, means fresh issue for redemption.
Correct.
We used 20 per share, 20 rupees and 25 rupees.
Correct.
For redemption, and balance we have created CRR.
Correct.
Then why we have to pass first that partly paid up share to be fully paid up?
Because that is the condition that you have to do. When I spoke about issue of fully paid up bonus shares, correct? For issuing bonus shares itself, that equity shares, if it was partly paid up, we first collected the full amount. Only then after receiving the full amount from them, we gave them the benefit. Everywhere, the company also should get the benefit. So in this case, even if it is a bonus share, or if you have to redeem your preference shares or debentures, the first thing is collect the full amount from them. Then only you can give back their money, no? Without even collecting 100 rupees, how will you give them back 100? So the thing is,
but in this case, we have created CRR and we are paying from that collected money. What is case we have created CRR and we have an application and plus CRR. Okay, but we are not using the final call money, no?
No.
That's why
I'm the understanding. No, it's already you have bank balance in the question, no? So you don't have to worry. Our question or our thing where we have to concentrate is the entries that we have to pass. How this is being financed, if they are explicitly asking you, then you have to. Okay. Here in the question, if you look at, see here, if in the question, if you look at, there is even bank balance given to you in the question, correct? There is bank of 15 lakhs already in the question. Correct. So there will be no problem for you. So it is the meaning that already I have 15 lakhs, which I will now use for redemption. That's all.
Ma'am, my question is regarding that. What is the sequence? If there is a date mentioned, what is the sequence? Means
first will be, if the date is mentioned, yes, first will be the final call. You will make the final call on the preference share capital first. That will be the first priority. Then you will go for the equity shares. Issue of equity shares, application, allotment. Here final call is not made before the redemption. The question has to be modified little. Okay. So I make these entries. After that, I create the CRR because I am making the redemption of preference shares. After I create CRR, after I have made the issue entry, I come for the redemption entry. I pass the redemption entry and I make the payment also. And finally, I take the premium on redemption and close it. This is the order that you have to pass. Whenever there is a partly paid up preference share given in the question, first make it fully paid. That will be the first priority. If there is an issue of equity shares to finance the redemption, then make those issue entries for the equity shares. Then the third thing is create the CRR. Then pass the redemption entries. Finally, if you have premium, take that from the P&L or general reserve and close it. This is the order. Okay.
Okay, ma'am.
Thank you. Gauri, 1 minute. I think I have unmuted you. Why are you not getting muted? I mean, unmuted. Gauri, yes. Tell
Ma'am,
me.
I have a question. While we issue right issues, ma'am, we received application money of rupees 20 and allotment of rupees 35.
Correct.
Including premium, total amount is 55 only.
Correct.
What about rest of amount, ma'am? Final call.
It is made after. It is made on 1st of January 2023. That is given to us in the question. But they forgot to write that it is being issued. Like if you look at your particular presentation of the question, no, you have considered only for the first two calls. So the understanding is the preference shares are redeemed on 31st of December. That is before making the final call of 55. You have redeemed your particular preference shares. So you have not received the money of 55 still. That is why I consider 20 plus 25. I mean 20 plus 35 you can take. Okay. The date there is a small thing which we will have to modify it. You just understand that the preference shares have been redeemed before the final call. That is why we considered only application and allotment. Okay.
Okay, ma'am. Then how to create, ma'am, CRR? I have doubt.
Okay. CRR always, Gauri, you have to remember that the face value, this particular formula is very, very important. I told you in the last class also. Face value of preference share capital. Now, how much is the face value? You should not consider the premium. 50,000, 8% preference shares into 100 rupees, correct? So, 50 lakhs came into the picture. Now, here you will have a doubt. The only logic here that I have applied, which is a different from the other questions, is out of the entire money of the equity shares, I am not getting full money. I am getting only application and allotment. Even in that sense, I have used the word face value. I am considering only face value excluding the premium, which means that on application, I am taking 20 and on allotment, 35 is including the premium 10 rupees. Remove the premium of 10 rupees and take only 25. So 20 plus 25, 45 I am receiving. This is the face value. So 50,000 into 45, 22 lakh and 50 is the total value of equity share capital I received. Okay. Now on this, if I subtract that from the face value of preference share capital, I will get the remaining value of CRR. You should remember very clearly for creating the CRR, always the face value of what? Face value of preference share capital, face value of equity share capital. Even if there is premium on redemption on preference share capital, don't take. Even if there is securities premium on the issue of equity shares, don't take. Only face value you have to take. That is what your act says. Okay?
Okay, ma'am. Thank you.
No problem. Next, we'll take a doubt from Shoaib.
Ma'am?
Shoaib, yeah?
The CRR already had a balance of 20 lakhs, no?
Yeah, it had a balance
sheet.
Yeah.
So, we are in deficit of only 7.5 lakhs.
Yeah, you can. So, correct. That also you can give a note and you can do it.
We can only transfer 7.5 lakhs from the general reserve.
That's a good thing. You can do that also.
Okay, ma'am. Thank you.
Correct, Shoaib. Thank you. Fine. Now, can we go ahead with the next particular thing? Again, there is a doubt. Okay, I'll do one thing, Kavita and Gauri. I'll take your doubts a little later, okay? Just that I have confirmed everything. We will just go ahead. Illustration number 10. Same question. There is calls in arrears, okay? I will finish that concept also and I'll take all your doubts. That should work. Yeah? Good. Gauri? I will take your doubts after that. Clear, ma? Now, let us go ahead. Okay. Yes, all of you please look at the illustration number 10. This is also a similar question, like it is an extension of this question where it says, all of you please see, with the help of details in the illustration number 9 above and further assuming that the preference shareholders 2000 shares failed to make the payment for the final call made under section 55. You are asked, oh, what is the section 55? That is nothing but you have to first make the partly paid up preference shares as fully paid. That's all. That is what the section 55 tells. Okay. So when you made the final call, 2000 shares failed to make the payment. That means what? Have you received the money? No. So it will be calls in arrears account. You are asked to pass the necessary journal entries and show the relevant extracts from the balance sheet with the corresponding figures as of 31st December 2021, assuming that the shares in default are forfeited after giving the proper notices. So here we have an extension coming in the question which says, when you are making this particular final call of 15 lakh and 15 lakh, are you receiving the full money? No, there is a default. How much? 2000 shares have not paid for the particular value. So when those people have not paid, what you have done, what you will do, you will forfeit those shares. So here the concept of the share forfeiture will come. You will have to make an additional entry. Now we are going to understand the same thing here. Okay. We are just going to understand after passing the shares forfeited entry, how is my CRR going to change, how everything is going to change is what we are going to discuss here. Is this clear? Now I will be showing the entry. The first entry will not change because I have asked money on 50,000 preference shares into 30, which is the final call. When I received the money, I understood that some people did not pay the money. Okay. So now I have to record what? Calls in arrears. Everybody please clearly see. Very, very simple question. Calls in arrears account debit to 8% preference share final call. Correct? So now the preference share final call account, actually I should receive 15 lakhs, but I did not receive the amount on 2000 shares at the rate of 30. So it comes to 60,000. So how much I would have received? 14 lakh and 40,000 I would have received. What would I have received? 14 lakh and 40,000. This is clear. So just I am recording for the calls in arrears. So 2000 shares have not paid. I have taken that into calls in arrears. And here the condition is that whenever you have not received money, my dear students, whenever you have not received a particular call value in the case of preference shares, immediately forfeited. The section 55 says make the partly paid into fully paid. If there are calls in arrears, forfeit the shares. That means to that extent of 2000 shares, you need not redeem or you need not give back because they themselves have not given you the money. No. So pass the shares forfeiture entry. What will be the shares forfeiture entry? Shares forfeiture is since the person has not paid. Here you cannot keep giving notice and all because final call is only 30 rupees. After this, there is no amount due. No. So I cannot give the notice also. So directly I am going to cancel his shares. 8% preference share capital account debit to shares forfeited to calls in arrears. So this will be the entry, correct? No, this is the entry which we have seen for equity shares also, shares forfeiture. That's all. Now how many shares ma? 2000 shares. What is the value? That is 100 is the value, correct? So 2000 shares at 100 is nothing but 2 lakh rupees. I am cancelling. Now shares forfeited is out of this particular 2070 rupees I paid. or the preference shareholder has paid. How much he has not paid? Only 30 rupees final call. So it will be 1,40,000 paid, 60,000 unpaid. Now come here, all of you. My dear students, now after passing this, how will my CRR entry change, madam? Other things, everything same. So these entries of 10 lakh, which is 20 rupees plus 25 rupees, that everything will remain the same. Where the difference will come, only in the computation of CRR. That too, what is the difference? I told you face value of preference share capital. So the simple logic is, out of 50,000 where you made the final call, 2,000 did not pay. So what did you do? Took back the value of 2,000. So 2 lakh rupees you have taken back from the shareholder. So no more 50 lakhs is the issued value. How much is the issued? 50 minus 2 lakhs is the issued value. So the face value of preference share capital, if you have forfeiture, if you have taken back your shares, if you have cancelled, you should remember to subtract that value. Which value, madam? 2,000 shares into 100, 2 lakh shares which you have forfeited, subtracted. So now it will become 48 lakhs. 48 lakhs minus 22 lakhs and 50,000 will give me 25 lakh and 50,000. Right? 2 lakh subtraction, no? That's it. 25 lakh and 50,000. Now the only change that's going to happen to me here is only here which will come to 25,000, not 27 lakh, because not required. In between, I took away 2 lakhs of my capital, that is 2,000 shares did not pay. I took back the capital from them. So now if I create CRR on 48 lakhs, that is more than enough. Okay. Till this you have understood 25 lakh and 50, 25 lakh and 50. Now there will be a change even in your redemption entries, because earlier redemption entry you passed for 50 lakhs, 5% premium 2 lakh 50, 52 lakh and 50,000 was the total. Now do you have 50 lakhs in your hand? No, it will change. What will happen to that? 8% preference share capital will now be, instead of 50 lakhs, only 48 lakhs, because 2 lakhs you have cancelled here. On 40 lakhs, 50% comes to 2 lakh rupee, 48 lakhs, 2% value comes to 2 lakh and 40,000. So the total value to be redeemed will be 50 lakh and 40,000. What I will do, these will be the same entries. Okay, the first entry will be the same, second entry will change, then you will pass a forfeiture entry. All these 4 entries will be the same, and then you will pass the general reserve. This will change, the amount will change. Now after this, I will very quickly pass the redemption entries. Okay. Okay, let me pass the redemption entries. This I will hold, because if you have doubts, then I have to take it up. Okay, 8%, you're able to see? Yeah. 8% preference share capital account will be only 48 lakhs. Why 48 lakhs? 2 lakhs I have subtracted. Total value 50 lakhs minus 48 lakhs. Then I have premium on the redemption, that is 5%, 2.4 lakhs. So to preference shareholders comes to 50.4 lakhs. This is the value. Now what will be the next entry? Preference shareholders to bank, which is 50.4 lakhs. And finally, from the general reserve, I need to take the amount of the premium on redemption, which is 2 lakh and 40,000 and 2 lakh and 40,000. That's all. Clear? Now, my dear students, apart from all of this, can you tell me what is the entry that I have to pass last? There is another additional entry. What is that? Simple. Shares forfeited account 1,40,000. It is over. After you have reissued, here the reissue is not happening. Only you have cancelled and that's all. You have repaid the amount. So there is no point of reissue. What is the amount? No. Entire amount of shares forfeited will go to which one? Which reserve? Capital reserve. What will be the entry? 1,40,000. So the last entry will be shares forfeited account debit to the capital reserve. This is the amount that you have not used. 1,40,000, 1,40,000. Simple. Yeah. Shares forfeited account to capital reserve 1,40,000 and 1,40,000. This is what you have finished, or the amount that is pending that you have transferred. The same question like your illustration 9, with the only change of the calls in arrears coming into the picture. If it comes, you have to forfeit the shares. When you forfeit the shares, you people have to remember that these shares will no longer exist. You need not repay because you have taken back your money. So subtracted from the total face value, CRR value will change, and the redemption entries that you pass, that value will also change. And finally, the shares forfeited account will be transferred to the capital reserve. With this, we come to an end of your redemption of preference shares. Before we could move to the next topic of debentures, if you have any doubts, now tell me, ask me, we can close this unit. Okay. Yes, Gauri, please.
Ma'am, I have a doubt on illustration number 9, ma'am.
Yeah, please tell me. What
There
happened
is
in
a
illustration? That's what Shoaib asked,
illustration.
no? Already Shoaib asked this doubt. There is already a CRR in the question, no, madam. So if we transfer the remaining amount, that is okay. That is enough, no? He asked. You can do that also, give a note. Or you can transfer the entire amount like this also, you can give a note. No problem. Okay?
Ma'am, I'm not. In coming to the general journal entries, ma'am, seventh
journal entry. Yeah. Okay, which entry? You should tell me which entry. I have not put numbers, no? General reserve.
To CRR, ma'am.
Okay. This entry, 27,50,000.
Yes, ma'am. Please explain that, ma'am.
That comes here, okay? This formula, did you understand? Now you tell me, how will you compute a CRR? What is the formula I told you?
Face value of preference share capital. Then divided by.
Not divide, minus. There is no divide. I wrote minus here. Since I wrote it down, it is not divide, it's minus. Okay. Minus.
Yes. Face value of equity shares, ma'am.
In this question, now you tell me, reading the question, what is the face value of the preference share capital to be redeemed? How many preference shares? What is the face value?
100 rupees, ma'am.
100 rupees face value. How many preference shares?
50,000.
So 50,000 into 100 is how much?
50 lakhs.
Good. Now come to equity shares. How many equity shares you have issued? Rights issue you made, how many?
50,000 shares.
Very good. At 100, you issued at what? Premium, huh?
Premium, ma'am.
Okay. How many installments?
Only 2, ma'am.
Why third one I am not considering?
After redemptions, we take that.
Very good. So now you tell me, what is the face value of these 2 installments? Application, how much is the face value?
20 plus 25.
Why 25? 25 is what?
Premium, ma'am. Less premium.
Okay, correct. So less premium. Very good. So 45 rupees you have. So 50,000 into 45 is how much?
22 lakhs 50,000.
So 50 lakh face value of the preference share capital minus 22 lakh 50,000, which is the face value of the equity share capital. Subtract these two. How much you will get?
27,050, ma'am.
27 lakh and 50,000. Correct? Now that only now I have put it in the general reserve.
Yes,
that is the CRR value. Now tell me, what is the point?
But in study module, ma'am, there is a different, ma'am. That's why I asked.
What happened in the study module? What is the amount?
50 lakhs minus 10 lakhs minus 12 lakhs 50,000.
What is the amount you are getting? That you see, no? Don't see the formula. See what you are getting. What we have done is the same. What is the amount?
Okay, ma'am.
You got 27 lakh 50?
Yes, ma'am.
That's all. You don't get confused here. I can explain even this also to you. Shall I explain it how they got that also? This particular 50 lakhs. Okay. Where is this? This particular 50 lakhs is there, no? Here the face value that you're writing in the first entry, how much share capital straight? 10 lakhs, correct? Now come to the second entry. Here in allotment, how much you have received? 12 lakh and 50,000. So they have added 10 lakh plus 12 lakh 50, which is nothing but 22 lakh 50. Instead of showing it total, I have taken 20 plus 25 into 50,000. Correct? But here they are doing 50,000 into 20, 10 lakhs plus 50,000 into 25, 12 lakh 50. That's all. I have taken the unit value, that is per share value. There they have taken the total value. That's all. It's the same. Okay, got it?
Yes, ma'am.
Okay, students. So with this, we are completing the preference shares redemption. Very, very easy topic. But I want all of you to go back. And what you should do? First, practice. Only if you practice, and while you are practicing, if you are going to make notes for the important points. What can be the important points? Like I was talking about the formulas. Face value of the preference share capital minus face value equity share capital is CRR. While I am computing the number of equity shares, I am not supposed to consider the premium. All of these are like the formulas. You should be very, very careful while you are computing the formulas. That will come only by practice. Only if you are going to practice more number of questions, my dear students, you can do this very confidently in your exam. Okay? Because the difference between your last time and this time is the addition of these redemption chapters units into the portions. Okay. So now we move on to the last unit, which is unit 6, redemption of debentures. So already in unit number 3, we have spoken at length considering the redemption or issue of debentures, correct? How are the issue of debentures made? Same manner the entries will be applicable like we did for issue of shares. But the only difference in the debentures was I can issue the debentures at par, premium and discount also. But when I was issuing the shares, I cannot do it at a discount except only for sweat equity shares. Clearly we explained. We did all the illustrations. So the first illustration that we did, well, you see there, I think 10 or 12 illustrations were there. In those, we did about the issue. So when the debentures are issued at par, no problem, same thing. And I also told you the face value need not be collected, or in the case of debentures, sometimes it can be collected in a full. It always need not be broken down into application, allotment, first call, final call, no. For the ease of doing the questions, and also here, it is in the form of a loan. Correct? The debenture holders become the creditors of your company, and debentures is like a debt. So when you purchase the debentures of the company, you are entitled to a fixed rate of interest, which is a charge against the profits. Irrespective of whether the company is having a profit or a loss, I am supposed to pay the interest on the debentures periodically. Correct? We have also seen the particular concepts in the issue of debentures. When I am going to issue the debenture at a loss, it will be considered, at a discount, it will be considered as a loss. The meaning is you have to debit it. Same entries will come. First will be the receipt entry, then will be the transfer entry. But the only thing is, instead of share capital, you will use the word percentage debenture. There will be no capital which will be added at the end. Okay. But in preference share, you had preference share capital. In debentures, it will be only percentage debenture. So we saw issue capital which will be added at the end. Change. Okay? If issue is done at preference share, you had preference will come here. If issue is done at a discount, then in the transfer entry, you will be writing that loss or discount on the issue of debentures account. You are going to debit this account specifically, and you are going to pass the entry. As simple as that. And then we saw issue of debentures as a collateral security. One of the people they asked a very good doubt, stating that you told I should not take money from debenture holders and pay preference shares. No, madam. Then why, when you take a loan from the bank alone, I am giving the debentures as additional security. Here I am not taking money from anybody. The company will not issue debentures. That is, a portion of the debentures will be held by the company. And when it goes for getting a bank loan, if the original loan is not, or the original security amount is not sufficient, it will give additional security. So the debentures that time will be directly issued to the bank only. You have not taken money earlier from anybody, okay? To the bank directly for the amount that they are giving to you as loan, you are giving the debentures. So what is the benefit for the bank? If tomorrow you are not paying the loan, or the original security value is not sufficient, then for the remaining amount, they will become your debenture holders. They will get the interest, and at the time of repayment, they will get back their loan value. This is the concept. So when you are issuing the debentures as collateral security, how will I account? There are two methods. Method 1, method 2. Under method 1, simple. In the notes to accounts, no entries you will pass. In the notes to accounts, under the long-term borrowings, you will show secured loan from the bank. Below that in the narration, you will write being or collaterally secured by the issue of so and so percentage debentures, number of debentures, value you will write and close the question. If you are going to do it as per method 2, technically, logically, method 1 is enough. If they are asking you for testing your knowledge to show method 2, you have to pass an entry. What is the entry? Debenture suspense account debit to percentage debenture. That means for the amount, you are passing an entry. After you pass an entry, where will these accounts go in the balance sheet, madam? Debenture suspense debit balance means it is an asset. Under other non-current assets, you will group the debenture suspense. And percentage debenture is nothing but your debentures account, which is a long-term borrowings. It will go and sit in your liability side in your balance sheet. This is the second concept we saw. The third concept was interest payment on the debentures. So the debenture holders will be entitled to the interest. You are supposed to pay them the interest. So how to compute the interest? On the face value, irrespective of you issue the debentures at premium or under discount, not your problem. The people or the debenture holders will get interest according to the face value only. Percentage will be given to you. You multiply the percentage into the value, face value, into the months, okay, or take it for the full year. After getting the interest for the full year, divide it. If they are asking you to pay annually or semi-annually, 2 times you will pay. So divide the interest into 2 halves and pass the entries. If they are telling you quarterly interest is paid, divide by 4 and take it for 4 halves. What is the entries that you will pass? So interest on the debentures is a expense for the company. So interest on debentures account debit to the debenture holders. And here I told you the entire amount will not be paid to the debenture holders, but the government 10% will go to the government as tax deducted at source. This tax deducted at source is 10%. So it will be to debenture holders to tax deducted at source will come. And then debenture holders account debit, tax deducted at source account debit to the bank will be the entries passed. This entries, if 2 times you're paying interest in a year, 2 times you should repeat. If you're paying it for 4 times, repeat it 4 times with the dates properly. And at the end, you are supposed to see that the total interest is finally debited from your P&L. You are passing interest on debentures. That is okay. Finally, you should pass the entry P&L account debit to interest on debentures, because it is nothing but charge against profit. You will take the interest from the profit. So finally, I am taking it from the P&L. Apart from this, we also saw how to compute the loss on issue of debentures. Only then I introduced you to the concept of when I am redeeming the debentures, I can redeem it at a higher value. So here we understood that when I issue the debentures, there is a premium which is called as securities premium. This is a profit for the company. But when I'm repaying the debentures, I can repay it at a higher value. Repayment means company should give money. So if the company wants to pay a higher value or the company is paying a higher value, it means that it is a loss. This is called as premium on redemption. Securities premium is different. Premium on redemption is different. That is when I started explaining premium on redemption comes into the question, it is a loss for you. It is a loss for the company. Where will I record it? When debentures are being issued, they will talk about the terms of repayment also. So there itself in the issue entry, when you pass the transfer entry, no, we were talking about, it was like this: debenture application account debit to percentage debenture, correct? So whenever you're redeeming at a premium, it will be to debenture redemption premium. Debenture redemption premium account will be there, and I am going to debit loss on the issue of debentures. This account, I took the same value here, correct? That is signifying the loss. This will come on both the sides. But if in the question there is also discount on the issue of debentures, both put together was the total loss. That is what we were talking. And after you understood this concept, I took you to the next concept stating this loss on the debentures, which can be the discount on issue or premium on redemption, any one or both together. After you get this loss, where should I show this loss? Then I told you it is of capital loss in nature. I will take it to the balance sheet first, and over the years I will bring it slowly to the P&L account, write it off, and by the end of the period, that is by the time I am going to repay back the debentures, the loss should have also been written off. So this was one major and the important concept that I taught you in that unit, wherein I told you can write it off equally or you can write it off in a ratio, reducing ratio. Write it off equally, the total amount of loss divided by number of years. Every year same amount will be written off over. But if you are going to repay the debentures every year, then there will be ratio that you have to find out. You people came up asking me, Madam, this is very easy. Tell me if any other ratios will come. Every ratio will be very easy for you people to do. Okay. So years, outstanding debentures, the ratio, amount to be written off. This particular column, tabular column, we were doing then. That you should remember. On this particular note, we finished the issue of debentures in the last class. Now, next thing is, now we are going to talk about the redemption. Like there was redemption of the preference shares, ultimately, in the issue itself, we discussed about the redemption of debentures, no? So now we have come to the exact topic, the last topic, how am I going to redeem my debentures? So when I am redeeming my debentures, what are the conditions that I am supposed to follow? So like in the case of preference shares, when you redeemed, you had three options. First option was issuing new equity shares. Second option was if you have undistributed profits, you are going to convert them or create a CRR. And the final option was a combination of 1 and 2. Now coming to the debentures, you can repay it. How or in which of the methods you can do the redemption is the first question that is coming to you. So here the methods of redemption is, I can do it in a lump sum method. That is, and one installment, I can just repay the entire amount in a lump sum. So 5 lakh debentures are there in the balance sheet. After 5 years, I will give you back the 5 lakhs. Finish, over. Now, not like that. I will do it in installment method. Every year, some particular amount I will be taking. Every year, some particular amount I will be repaying. Not taking, I will be repaying. So in this method also, I can give back or repay back my debentures. Or I can issue new shares. Here also, the concept of issue of new shares can come into the picture. And finally, I can purchase my own debentures from the market. But this is not included in your concept. Finish. Only these 3 points we are going to concentrate and we are going to learn. Okay. So the lump sum method has got 2 illustrations. This raising of new shares has 1 illustration, and finally just passing the journal entries, combining these concepts, you have 1 illustration. There are just 4 illustrations and 3 practical questions subject or for your redemption of debentures. Is this clear? Now, these are the methods. Now, for understanding or for doing this, we need to understand few particular rules. Like we have created the capital redemption reserve in the case of redemption of preference shares. Should we create something for the debentures also? Yes. Okay. We will be creating the debenture redemption reserve. Very clearly, please be very attentive and listen. Debenture redemption reserve will be created. Okay. Which is not equal like the particular preference shares. We took preference share capital face value minus equity share capital, nothing. Here life is much simpler. Just take 10% of the debentures to be redeemed. That's all. Face value, of course, okay? 10% only of the face value of the debentures that you are going to redeem. Calculate 10% of it, create DRR. DRR is debenture redemption reserve. But the only change here is, my dear students, their capital redemption reserve will remain as capital redemption reserve in your balance sheet and use that for issuing of fully paid up bonus shares. Here, the debenture redemption reserve, once after the redemption is over, you are supposed to transfer it into your general reserve. Debenture redemption reserve will not exist in the books once after the debentures have been repaid. The point here is creation of the debenture redemption reserve, which is nothing but 10% of the face value of the debentures. It will be created out of your P&L account, and after redemption, it has to be transferred to the general reserve account because no longer a debenture redemption reserve should exist in the books. Clear? Now come back to after this, there is a other concept which is very, very unique only for the redemption of debentures. Here, the reserve that I am creating are always in the interest of the debenture holders. You are going to make an investment for the debenture holders. What is this, madam? Make investment meaning whenever you collect the money in the form of debentures, you are supposed to create a debenture trust. That point we have seen. So what does this trust do is it will take 15% of the face value of the debentures into an account called as the debenture redemption reserve investment account. That means the 15% of the value of debentures given or issued by the company will be collected and it will be kept aside and it will be invested outside the business. So this is also mandatorily to be created. So the exception or the different concept that you are seeing from preference shares to debentures is you will create debenture redemption reserve like CRR, but it is not for the entire face value, only 10% face value enough. Apart from this, debenture redemption reserve investment will also be done. It is nothing but an asset. How it is created? 15% of the face value of the debentures that is being issued will be taken by the company, put into this account. It will be transferred or invested outside. When I say invested outside, I can get interest from that also. When I get the interest, the company will take that interest, and at the time of what is the purpose of this investment? Ultimately for repaying the debenture amount back. This investment is being done so that at the time of redemption I need the cash. I will sell this investment and get the cash and close it. Is this clear? So these are the conditions with regard to issue of debentures. Redemption of debentures. So the first thing is under lump sum method at one particular installment you can repay it, or you can take it every year some portion will be repaid, or you can issue new shares at the time of redemption. You can issue new shares, convert it and you can do it, or you can purchase your own debentures. So these are all the ways to get back or repay back the debentures and get back the instruments into the business. That is, you will give back the amount to the debenture holders, get back your certificates, so that no longer the company will be liable. It has already repaid. But this purchase of the own debentures is not coming into your portion. We are only going to talk about these three. Even in these three put together, we only have 4 illustrations. And under that, madam, what are the conditions, madam? So the first condition almost will be, of course, it will be if the debentures are partly paid, make them fully paid. But technically, in the case of debentures, it will always be a fully paid question. It will not be like in the preference shares. Okay. After that, I need to create 2 things here, madam. The first thing is the debenture redemption reserve. Which value or how much value? 10% of the debentures that is to be redeemed. Face value only. Even if there is a premium here, don't bother. Take the face value, create the DRR. From where you will create? From the P&L account, or you have a general reserve balance from the general reserve. Okay. And then debenture redemption reserve investment. That means to the extent of 15% of the face value of the debentures, every company that is wanting or taking the debenture money from the people is supposed to invest this value outside. Then at the time of repayment, I will sell this and I will get it back. Now, when I talk about the issue of new shares, it is very simple. My dear students, like in the case of preference shares, there will not be an entire amount where for the entire amount you will issue the equity shares. Here always a percentage only will be given to you as an option to convert as equity shares, because debenture holders, if they are converted fully into equity shares, there will be a dilution of power. So that is why you will not do it fully, but you will do it only in a small variation. That is, a small percentage will be given. On this note, I would like to first calculate what are the new shares that you have to issue. We will look at the illustrations which talk about the issue of new shares in the case of redemption of debentures. Let us very quickly go ahead and see this particular concept. Okay. Just a minute. I'm just going ahead with this, opening up and coming back. All of you, please look at the illustration number 3. XYZ Limited has issued 1,012% convertible debentures of ₹100 each, redeemable after a period of 5 years. According to the terms and conditions of the issue, these debentures were redeemable at a premium of 5%. Okay. The debenture holders also had the option at the time of redemption to convert 20% of their holdings into equity shares of ₹10 each at a price of 20 per share, and the balance in cash. That means 20% alone I can convert into equity shares. The remaining 80% I have to repay it back to them in the cash only. Debenture holders amounting to ₹20,000 opted to get their debentures converted into equity shares as per the terms of the issue. Okay, they have opted to get the things as per the terms of the issue. Now you are required to calculate the number of shares issued and cash paid for the redemption of ₹20,000 debenture holders. So here they are not asking us to calculate what is for the entire question. No. They have given you the terms. First, we need to understand the terms, and then you should apply those terms only on the value of ₹20,000 debenture holders. So the worth of 20,000 debenture holders only want to exercise the option. So the first thing is you have 1,000, what percentage debentures? 12% convertible debentures at the rate of 100
What
rupees.
percentage
Okay?
debentures?
When you are
12%.
redeeming this, you are giving a 5% premium. That means 100 rupees plus 5% on 100 rupees is 5 rupees. So you are going to redeem at a value of 105. This is the first point that you people need to understand. Okay. Now I am giving them a option to convert out of their 100%. 20% I will give you equity shares. 80% I will give you in the form of cash. Okay. Now this 20% equity shares, what is the face value that they are issuing? Face value is 10, but the issue price is 20. That means 10 plus another 10, that is the premium they are issuing. These are the first terms I understand after I started reading the question. Clear? But now what is my question? I want to find out if 20,000 rupees worth debentures want to exercise this option of converting it into 20% of equity shares, how much equity shares will come to them, how much they will get in the form of cash. Is this clear? First, did you understand the question? What is the question? I have 1012% convertible debentures issued at 100 rupees. Now this one redemption 5% I will give them premium. So 100 rupees I am repaying it at 5% premium, means on 100 5% will be applied. 5 rupees will come here. This will become 105 rupees. Okay. After that, conversion terms are how much? Even I have one debenture, in that 20% I can convert to equity shares. Rest 80% I will be given cash only. I cannot convert my entire debentures into shares because it will dilute my power. So 20% equity shares also, I am giving equity shares whose face value 10 rupees, at 20 rupees I am giving it. Now they are asking you, the debenture holders who are holding worth how much? 20,000 shares. How much I will give them equity shares? How much they are going to receive the cash? Very, very simple. Now all of you please come down a little down and we will see. Now find out the number of debentures. It will become easy for us to do. So 20,000 debentures worth means 100 rupees is the value. Issue value is how much? 100 rupees. So if I take 200 debentures, now I understand that 200 debentures, I need to see what if they are exercising this particular option. Clear everybody? Now come here. Now equity shares, how much I will give? Will I give for the full? No. Out of 200 debentures, I am only going to give 20%. That means only 40 debentures are going to get the equity shares. Now what is the value? 40 debentures, they are repaid at what value? 40 debentures at 100 plus 5. Repayment value only I should consider. This 40 debentures, the repayment value is 105. So 40 into 105 rupees gives me 4,200. Why madam 4,200? Because 40 shares or 40 debentures, I should give them back as per the terms of redemption 105 rupees. That is okay. So the value I should give them is 4,200 rupees. But for this, am I giving them cash? No, 20% is in the form of equity shares I am giving them. Now come here. What is the value of equity shares? 10 rupees. But if there is a premium, include the premium and take. If there is a premium, include the premium. So this will be 20. So 4,200 divided by 20 will give you how many number of equity shares that I have? 2,100 equity shares. No, 210 equity shares. So 210 equity shares I will be issuing to them. Right? And then how much is the cash I will be paying? What is the cash I will be paying? Cash is nothing but for 200 debentures into 80% I have to pay the cash, which is 160 debentures. So what is the value at which they are paid? At 105. So it comes to 16,800 rupees I am going to pay. Half of 16 is 800. Correct. So 16,800 rupees I am going to pay in cash. Simple, because 20% I have converted. That comes to this particular value, and the remaining value will come to the Cash that I am paying 16,800. So the shares that are issued, equity shares, are 210 for the worth of 20,000 debentures. 210 shares at the rate of 20 rupees will be issued. Apart from that, 16,800 rupees cash also will be paid. This is the understanding. So this is an illustration where you get to understand that the debenture holders, if they are given an option to convert a portion of their holdings into equity shares and a portion cash will be paid, how I am supposed to compute? Simple thing is, find out how many number of debentures want to exercise. In this question, we have 20,000 rupees debentures who want to exercise. Divide by the face value. Then you will get how many number of debentures. When you convert it into how many number of debentures, the question becomes very, very simple. Out of 220%, that is 40 debentures, want or they can convert into equity shares. Remaining 80%, 160 debentures will be paid cash. This is a straight question. Finish it. 160 debentures into 105. Why, madam, 105? I am repaying it at a premium. So 100 plus 5 is 105. So I take 160 into 105, 16,800 paid in cash. Over. Now come to this. Here also 40 into 105 only I should do, because the value that you have to repay will not change. Per debenture value, 105 rupees will be there. But if you are paying in cash, with this step, you will close it. But if you are issuing shares, you will go for one more further step. Apart from arriving at what value, this I am going to convert it into equity shares. When you divide, the denominator should be with the issue price of the equity shares. Face value can be 10, but issue price, if it is more than that, please consider the issue price. Consider the premium. And then when you take it, you will be having, or you will be getting 210 shares. So this kind of a question can even be asked in your MCQ, wherein how will you compute the number of shares alone can come, or they can ask you how much cash should have been paid. So in this fashion, you are going to complete this particular question. Clear? Now for better understanding, we are having one more practical question which we will do and complete the today's class. And on Wednesday, we will come back the first half an hour or 1 hour. We will definitely look at the other illustrations and practical questions. And next, my aim will be the last 2 attempts papers I will be bringing, and I will be discussing with regard to chapter number 11. Okay. Now, please look at this particular concept, this particular question. A company had issued 20,000 13% debentures of rupees 100 each on 1st of April 2021. Okay, the debentures are due for redemption on 1st July 2022. The terms of the issue of debentures provided that they are redeemable at a premium of 5%. The same question like what we have written now. Also conferred an option to the debenture holders to convert 20% of their holding into equity shares. Nominal value 10 at a price of 15. The debenture holders holding 2,500 did not exercise the option. Calculate the number of equity shares to be allotted to the debenture holders exercising the option to the maximum. Same question, it is asked in a different manner. That is, in illustration 3, they themselves have given us 20,000 rupees. For this, just to find out how much cash, how much equity shares. Here, they have given you indirectly telling, out of the total number of debentures, some debenture holders did not exercise the option. So, remaining debenture holders means they have exercised the option. Whoever has exercised, find out how much equity shares are being issued. That is the question. So the same question, a little bit twist. So here instead of 1,000, it is nothing but 20,000 13% debentures. How much it is? 20,000 13% debentures at 100. The same question is coming. 20% again, 80% again. Face value 10, now issued it at 15. That means premium comes at 5 rupees in the question. Now they are telling you 2,500 debentures did not exercise the option to convert. They did not want to convert, so they wanted full cash only. Okay, go. Now, how many people are remaining or how many debentures are remaining is quite simple. Come back to the question. What are the total number of debentures first issued? 20,000 debentures are issued. So we will go ahead with the question like this. Total number of debentures issued by the company. 20,000. Under that, the debenture holders who did not exercise the option. So I am not exercising the option to convert, which is 2,500. How many people have taken it up? 17,500. So now what is the debenture redemption amount? So the amount of redemption is nothing but I will be taking 105 rupees. How, madam? 105 rupees. It is nothing but given to you all in the question that there is a 5 rupees premium in the question, correct? So 100 into 5% will give you 105. Now I come back to out of the entire the 17,500. Now, what is the amount of, or you can take total here, but we are concerned only with how much percentage is converted into equity shares, right? Amount of redemption, the next step we will calculate. So here you take number of shares convertible, that is 20% of this is getting converted. So 17,500 into 20 percentage gives you 3,500. It gives you 3,500 number of shares are required. Now please see here in the question, what is the redemption value? I told you multiply it 105. Why, madam, you didn't multiply 17,500 with 105? Because my question is asking how many shares are required to be issued. So I will convert the question into simpler terms. I am not taking entire 17,500 debentures, but I am taking only 20% of the debentures to convert them into shares. So 3,500 into 105 gives me 3,67,500. How much it is? 3,67,500 is the total value. Correct. In this particular total value, what is the issue price of the share? 15. So divide by the issue price of this share, I will be getting a total of 24,500 shares. That's all. If in the same question, if they're asking how much of cash is supposed to be paid, then it will be 80% of this value. So it comes to 14,000. Okay. 14,000 debentures at the rate of 105 it will be paid. At the rate of 105 it will be paid. So 14,000 into 105 gives us that particular value. You are supposed to write it there, which is 14,70,000. So this is the cash being paid to them, and this is being offered, which is 3,67,500 offered in the form of equity shares of 15 per share. 24,500 shares is being issued by the company. Clear, everybody? With this, I think at this particular time, we can rest with this particular concept. And if any doubts are there, I'll take for the next 5 minutes and then wind up the class. So we have started with the redemption of debentures. Under that, we have calculated the questions pertaining to the number of equity shares, like the entire debentures cannot be issued. It cannot be converted into equity shares. Only a portion can be converted. If only a portion is given, then how to compute it? Okay. We have seen the illustration 3 and the practical question number 1. Clear? So the next 5 minutes, if anybody has doubts with these two concepts, we can go ahead. Otherwise, I will be back on Wednesday for my final class where I will be completing this other 3 illustrations that is pending. That is under the lump sum method and the installment method. Journal entries also we will be looking at. And then looking at the exam questions also. Okay, I think Hemalata Soni, she asked me long back, how about this particular examination question? I will do your examination questions, okay, on this Wednesday. Anybody, any doubts? Yes. Any doubts? So again and again, what I am trying to explain to all of you is you will understand the concepts when it is being taught in the class. It becomes very easy for you people to understand. But to retain that again and again, only if you do practice, accounts cannot be studied. Please go ahead and do the practice. When you start doing practice, you will understand few things wherein you will understand what you are not knowing also. The more you practice, the more you will be confident, and the lesser time you will be able to do a neat presentation. Accounts is all about studying what is given to you in your ICAI study material, nothing beyond that. Go concept wise. Each particular problem, try to solve it 2 to 3 times. You will definitely get more than 70. It is a scoring subject, provided the presentation is important. When you do a journal entry, what is the format? When you draw a ledger account, what is the format? When you are doing a balance sheet or final accounts, what kind of formats I have to follow? Working notes may what are the working notes I will have to give? What are the cross reference I will have to do? All of this will come only if you are going to practice. You have enough time. Don't worry. Sit down and practice. It is going to be easy. Okay. I think nobody else has come up with your doubts, and I assume that the class you don't have the doubts. If you have, please go back and start working out, and then we will look at your other parts of the doubts on Wednesday. Utilize your maximum time to ask me the doubts this Wednesday. That's going to be my last class. We are going to complete this particular company accounts chapter 11. Okay. Thank you, everybody. Thank you for the class.